Hey guys, in this episode, we're going to be talking about how to avoid these 4 common cryptocurrency scams and how to invest the right way. So over the past few years, there's been a lot of capital that's been flowing into the cryptocurrency economy. And because of that, there's just a lot of scams that have been popping up recently. And my goal with doing these videos over the past 4 or 5 years has really been to show people the lessons I've learned and also help you guys not get taken advantage of. And so in this video, I want to go kind of step by step through some of the most common scams and also show you how to invest the right way. So the first scam we'll talk about is pump and dumps. Now, this is a term that has been around for a long time, and pump and dumps are nothing new. They've been around for decades, but it is constantly evolving. You know, for anybody who's seen The Wolf of Wall Street, those were the old school pump and dumps where you'd have these boiler rooms of people on the phone that we'd call investors, mom and pop investors, people that were, working in their career and knew very little about the markets, but they'd get a call from a slick salesman that was saying something like, hey, ABC stock is about to explode and you should put your 401k or your retirement account all into this stock. And what they would do is they would front run. So they would buy a whole bunch of this and then they would pump the stock, right? And then after a whole bunch of people drove the price of the stock up, then the insiders would sell, causing the price of the stock to crash, and all of the real investors would lose most of their capital. And then fast forward into the late 90s, early 2000s, we saw that kind of go digital, right? So we went from like the old school phone sales to email spam. There was just thousands and thousands of newsletters and websites that were set up to promote penny stock scams. And what would happen is you'd get an email saying, again, ABC stock is about to explode. Go to this website for more information. And basically, these paid promoters would get paid millions of dollars sometimes to basically pump these stocks. And then again, whenever the price of this penny stock would go up, insiders would dump, leaving all the investors to lose all their money. And now fast forward to today, this is actually starting to, or not starting, it's been a pretty big thing for the past few years, but it just continues to grow, which is why I want to talk about it now. There's a lot of pump and dumps in cryptocurrencies. People that are setting up like chat rooms and basically pump and dump groups to basically screw over investors. And I'll just show you an example. These are some of my spam comments on my own YouTube channel where you'll get these pump and dump, just blatant pre-pump groups, trying to convince people to buy into these scams early. Have you ever heard of pump and dump? Follow this Telegram group, right? So there's a ton of these pump and dump groups everywhere. But the reason why this is so bad is because if you chase this, if you actually follow the advice of these pump and dump groups, odds are you're going to lose most of your investment. Let's take a look at an example. So this is what a typical pump and dump pattern looks like, where you have the early investors or the insiders that will buy here, and then they'll send either emails or they'll send notifications in a group basically saying, hey, everybody, the pump is on, buy now, buy now. And then what'll happen though is most of the later folks to the promotion will actually start buying up here, right near the high after it's gone up several hundred percentage points. And then what will happen is the insiders will actually sell into these buy orders. And then you'll notice like on this particular price chart, you can see from the high to the lower it is today, it lost about 80% of its value. And so this is very common. This happened in penny stocks for many, many years where you see this kind of same price pattern and then it'll die. And this is actually, by the way, just a side note, this is why I thought Bitcoin was a scam back in 2011 when I first heard of Bitcoin, because it had this price pattern. But there's actually a big difference between like a coordinated pump and just, a big bubble, right? So like here in the first part of 2013, we saw a bubble where price went from like 25 or 40 bucks up to 250 and then crashed, right? And this is all part of the bigger cycle of, cryptocurrencies. But the biggest difference between just regular market action and a pump and dump is that pump and dumps are actually a coordinated effort to drive the price of something up and then basically sell into investors' buy orders. And the second really common scam scam is a paid promotion, and it's actually kind of similar to a pump and dump, except what this is you'll have companies that will pay marketers to promote either their stock or their coin or their ICO. For example, I get dozens of emails every single day from people that are creating ICOs that are reaching out saying, hey, Chris, can we pay you and you do a video to basically promote our coin? And my answer is always no. I am not a paid shill. If I want to invest in your project or your ICO or your startup or whatever it is, I'm an actual investor. I'll actually invest if it's good. But for anybody that is watching this that has sent me those emails, that's why I don't respond. Like if you send me an email and say, here's what my project's about, do you want to invest? To me, that's dramatically different than, hey, listen, we're doing an ICO launch and we'll pay you thousands of dollars to promote. It's just not worth it for me. I make much more money as an actual investor, and that's what I spend most of my days doing is due diligence on startup projects and coins and other markets that are actively trading on exchanges. Now, the third common scam are Ponzi schemes, and this is something that I kind of took for granted that I thought was really widely known and was kind of obvious, but the fact that BitConnect got so huge, despite a lot of people talking about how big of a scam it was, just shows how, this is a global market, right? So we have cryptocurrencies are a global market, which means we have people that are in places on Earth that maybe this is their first experience with financial markets. And if you have somebody, a slick salesman come in and say something that offers a guaranteed return and says, look, you'll earn 1% a day, right? Which sounds kind of reasonable, right? If you don't know much about financial markets, but if you earn 1% a day every day, eventually you're going to be the richest person on the planet. So there are no investments that you get into that are risk-free. It just doesn't happen. The bigger the potential reward means the bigger the risk. For example, like whenever I invest in early stage startups, no matter if it's through traditional venture capital or an ICO or something, whenever I put that money out, I'm actually accepting that I could lose 100% of that investment. And if I make 10 investments and 9 of them go bust, I lose all my money on 9. My goal is to recover all of those losses and then some on the 10th one that hits, right? So when it comes to Ponzi schemes, like again, it was almost like, as soon as BitConnect went down, the next day there were like 2 or 3 other scams that popped up immediately. So just stay away from that stuff. Even if you think you can make money in the short term with it, A, it's probably illegal, and B, you are open to massive risk if there's an exit scam. So just stay away from anything that looks like a Ponzi. And the fourth scam is profile jacking. This is something that I've just seen more and more recently, and I did a video on this last year and recently did a blog post, but basically what this is where you have scammers that will impersonate influencers, usually in the crypto space, and then try to get people to send them money. And this is a blog post I did a while back saying, will the real Chris Dunn please stand up? Just basically explaining what's happening, where people will create fake profiles on different social media websites or email accounts, or they've even called people pretending to be me or other people, and they'll usually do something like say, hey, listen, send me money and I'll trade for you. So I've actually never traded anybody else's capital and never will. I trade my own money, and that's what I do. Or pumping a specific cryptocurrency, right? Like trying to do a pump and dump scheme in somebody else's name. Like I said here, like I'm not a paid shill or promoter. I don't accept money to promote stuff. And the third thing is they'll also promote Ponzi schemes or pump and dumps or MLMs, right? Like BitConnect and that type of stuff. They'll also create accounts on messaging apps like WhatsApp and Telegram, which I'm not on, by the way. So I gave my 3 kind of verified social media accounts. And I also just started adding some examples of like different fake accounts you can see on Facebook, Twitter, email. Like it's pretty ridiculous. And this even happens on Twitter, where you'll have people that will actually respond to a tweet from a verified account with an impersonation account saying, hey, followers of X, send me 1 Ethereum and I'll send you 10 back, right? So people are trying this in all different kinds of ways. So just be aware that that's happening. Now, let's talk about how to invest the right way. There are just a few simple things that if you do will hopefully save you a lot of pain and misery. And the first one is decide what you're going to use for risk capital. capital. What that means is whenever you look at your finances and your net worth or your portfolio, say, how much of this money am I willing to lose in the markets, right? Not that your goal is to go into the markets and lose, but here's what happens if you get this wrong. If you go in and you're like, hey, I have this money, but I need to pay my mortgage or rent or groceries next week or next month, and let me just try to put it in the markets and double it real quick and pull it out. At that point, you're not an investor, you're a gambler, and odds are you're going to lose your money. Now, the right way to do this, and I'll show you very practically why, like there's a very real reason that if you want to be a long-term successful trader or an investor, you have to do this. Because if you do set money aside and you say, hey, here's my money, here's my, my cash flow for my bills and stuff. This is capital I'm willing to put into the markets. Maybe it's crypto, maybe it's stock, maybe it's real estate, maybe it's whatever. Say, this is where I'm willing to invest this. And because you're willing to lose that money, you're able to actually trade and invest without emotion, right? Where if you need that money, if you're like, hey, I can't afford to lose this, then what's going to happen is, for example, you might like pull the trigger on a trade and it starts to go against you a little bit. And you're like, oh my God, I can't lose this money. So you sell the bottom, and all that was a little pullback. And then it turns out to be a huge winner, right? So just predefine what you're willing to invest. It's just going to serve you much, much better over the long run. Now, step number 2, after you predefine what your risk capital is going to be, develop your own trading plan. Don't just blindly follow somebody else's trade alerts or tweets or whatever. And here's why. And this is what I mean by trading plan. What market conditions do you trade or invest in? Okay. And once you understand what market conditions like trending, channeling, parabolic reversals, right? Define what types of trade setups you'll take. Like I take dip buys under these market conditions, or I take breakouts under these market conditions, or I short whenever these market conditions come about, right? And when do you stay away, right? Because most of the time, the best trade is no trade. Like 9 out of 10 trading days on any given financial instrument are probably not worth taking action on, meaning either entering a new position or managing an existing position. Most market action is noise, right? So predefine your market conditions that you'll trade and what trade setups you'll have in those market conditions, and then what your risk management looks like on each trade prior to pulling the trigger on an entry. Meaning, let's say we're in a beautiful trending market, we're in phase 2. If you watch my last video about the 5 market cycles, say we're in phase 2 where we're in a healthy trend and you have a breakout trade, right? Before you take that breakout trade, predefine what your risk is, how much you're willing to risk on that specific trade based on the trade itself, not some like arbitrary number. And then where are your profit targets based on that trade? Every trade's going to be different. That is dramatically different than looking at somebody on Twitter that says, Bitcoin's breaking out. And you go, hey, Bitcoin's breaking out. All right, I'm going to buy, right? Like that type of gambling, that's what that is. That type of gambling will get you crushed over time. You might get lucky on 1 or 2 trades, but the real way to do this, guys, is to set up your trading plan ahead of time. And number 3 is you only want to trade liquid markets. If you're trading stocks or futures or Forex or crypto, I don't care. Trade stuff that has actual trading volume. And this will depend on what trading size you're trading with. But I would say, like, as of right now in crypto, I don't pay attention to coins that are trading less than, say, $1 million a day in actual trading activity, right? In actual trading volume. The reason why is you can get stuck in a trade, right? Say you have a breakout trade. Again, another example, but let's say it's a real illiquid coin. Let's say you go to CoinMarketCap and you look at the top gainers for the day. You find something that's up 20% and you look at the chart and you say, oh, this is great. This could go another 20 or 30%. But then you look at the trading volume and you're like, oh, this thing's only traded $50,000 today. And if you're going to say trade a position that's 50 to 100% of that, say 25,000, 50,000, whatever, if you're trading the actual trading volume, you're going to get stuck in that trade if it goes against you. So just trade really liquid stuff. And the other reason is because the more liquid the coin, the harder it is to manipulate by pump and dump groups. Step number 4 is take anybody's specific opinion about an ICO or an existing coin or a stock or whatever. take that with a grain of salt and ask, what is their real motive behind pumping or promoting or talking about this cryptocurrency or this stock, right? Are they an investor in it? Are they somebody who got paid to promote it, right? Like really just think about why you're getting that information. There's a lot of like financial newsletters that are recently this year, like for the first time ever, jumping on the crypto bandwagon and just pumping out like bullshit content just to like sell subscriptions. And so just always ask like, okay, what is the motive behind this, right? And do your own research. Like if you're interested in a coin or a crypto and you start doing research and you see people talking about it, just see if that person is objective. Like, are they talking about the pros and the cons? Are they talking about, you know, what's going right, but where the risks are? Or are they just like, hey, this thing's going to the moon, Lambo, baby, you're going to get so rich, right? Like just be able to see through the bullshit, because a lot of stuff out there that I'm seeing right now is just that. Number 5, if it sounds too good to be true, guys, I hate to break your hearts, but it probably is. You know, anything talking about guaranteed returns, anything talking about like something for nothing, risk-free trades, that does not exist. Especially anybody that's like, hey, let me trade for you, right? Run from that. If you're going to participate, and I talked about this in my 50 lessons video, but if you're going to participate in highly risky markets like cryptos, make sure that you manage your own capital. Don't trust somebody else to do it for you. Do it yourself, or don't participate at all. Just buy some ETFs in the stock market and don't think about it. But if you want to look for alpha, if you want to look for higher returns and you want to try to exponentially increase your gains over time, be disciplined, develop your skills, learn the right way to do this stuff, and manage your own money. And then I'll leave you with this. So kind of my final thought is, why are you in crypto? Right? Is this something that your cousin or your uncle told you about, how you could just get rich and buy a Lambo by putting a little bit of money in 30 days? Or is it something where you look at Bitcoin and you go, you know what? I see the potential for what this can do to change the world. I believe in Bitcoin or blockchain technology or another crypto, right? You know, play the long game. Be in this for the long haul. Because guys, look, this stuff is not going anywhere. It's cyclical. There's big boom and bust cycles, which is why I like to trade it, because of the volatility. So trade the cycles and be smart about risk management. Just understand the larger context of where we are in a cycle, right? Like if we're on the backside of a parabolic move that is popping, don't try to dip by every, you know what I mean? And if we're on the front side and we have a beautiful trend intact, don't try to short every pop, right? Just be wise, develop a trading plan, and focus 99% of your attention on risk and money management, not just trade entries, because trade entries are great. I mean, it's good to get into the right thing at the right time, but where you actually make or lose money on a trade or an investment is how you manage it. So I hope this is helpful. If there's anybody you think would get value from this, feel free to share it. By the way, guys, I know I've only been doing like one video a month. I've just been incredibly slammed with doing my own investments and my own trading, and also helping our community at Skill Incubator. So leave me a comment if you have either feedback or a question, and I try to get back to those. But again, thank you guys so much for watching these videos. It means a lot to me that I know a lot of you guys have your notifications turned on and you watch them and like them. And I mean, that's just really cool for me. So again, from me to you, thank you for watching these, and I'll see you in the next one. Take care.